Welcome to Tesla Daily News podcast on January 22nd, 2026. Today, we're tracking the two things investors care about most right now, demand and pricing in key markets, and how quickly Tesla can actually ramp the next wave of products that support the autonomy narrative. Let's get into the biggest Tesla developments that could move the stock. Story 1. Model Y just posted a dominant China milestone, and it matters more than ever. Tesla's Model Y was once again the best-selling SUV in China for 2025, with about 425,337 units sold. Here's the context. China is Tesla's most competitive battlefield and also one of its most important margin and volume engines. When the China consumer is still choosing Model Y at scale, that's a signal that Tesla's product market fit hasn't collapsed, even with intense local competition. The details. Those roughly 425,000 Model Ys were about 3.58% of China's roughly 11.878 million SUV market. And importantly, reports noted BYD was not in the top 5 SUVs by this ranking, while Geely models followed behind Model Y. Impact for investors. This supports the bull case that Tesla can keep meaningful share in China even as pricing pressure persists. It also supports factory utilization in Shanghai, which is key for fixed cost absorption. But it does not eliminate margin risk. China demand can be strong while pricing stays cutthroat. Takeaway. China Model Y strength is a real positive data point for volume and competitive positioning, but investors should still watch price actions and incentives as the real determinant of automotive gross margin. Story 2. Europe demand softness is showing up in pricing moves, and that's a margin headline. Tesla is pushing a Model Y price down in France using a trade-in bonus that can bring the effective price to about €31,290. Context. Europe has been a mixed story for Tesla, with increased competition and a consumer that's more price-sensitive. When Tesla leans on incentives, it can protect unit volume, but it usually pressures per-unit profitability. Details. The French pricing move is framed as a way to relaunch or stimulate Model Y sales after Tesla's sales fell in Europe last year, according to the report. This is exactly the kind of lever Tesla uses. If demand slows, Tesla can dial pricing quickly. Impact. Near term, incentives can stabilize deliveries and help keep factories flowing, which the market often likes. But the stock risk is that investors interpret this as a sign that demand is being bought, which compresses gross margin and potentially EPS. Takeaway. Watch for whether these incentives spread to other European markets and whether they become persistent rather than tactical. Story 3. Volkswagen overtaking Tesla in European EVs highlights how crowded the region has become. A report out of Germany says Volkswagen has overtaken Tesla in Europe for electric cars. Context. Tesla's valuation has long included expectations of category leadership. Europe is also a market where brand breadth, dealership networks, and local lineup diversity can matter, even in EVs. Details. While the article emphasizes Volkswagen's improvement and positioning in Europe, the key investor point is that Tesla can no longer assume top slot share in every major region without constant product and pricing pressure. Impact. If Tesla's European share continues to slide, it can weigh on growth narratives and may lead to more discounting, again pressuring margins. On the flip side, Tesla doesn't need to be number one everywhere to be an exceptional business, but the market often prices it like it should be. Takeaway. Europe is shifting from a growth showcase to a competitive grind. For Tesla, that means delivery stability matters, but margin durability matters more. Story 4. A new China challenger is getting real consumer traction, Xiaomi's SUV moment. Xiaomi's YU7 SUV is reportedly drawing crowds in China, and the tone of coverage is that it could put Tesla in a bind. Context. Tesla's most profitable move in recent years has been scaling a small number of models globally. China competitors are taking the opposite approach: rapid cadence, aggressive pricing, and heavy tech features. Details. While this article is more qualitative than data-heavy, the investor implication is straightforward. Tesla's China demand strength can coexist with intensifying competition that caps pricing power. Impact. Competitive pressure in China can translate into lower average selling prices and higher marketing or incentive intensity. That's a direct hit to near-term margins, and it can also raise questions about long-term share. Takeaway. Keep watching China monthly share and pricing. Tesla can win on cost and efficiency, but the market is no longer Tesla versus legacy. It's Tesla versus extremely fast-moving consumer electronics-style automakers. Story 5. Musk says Cybercab and Optimus will ramp, agonizingly slow, and that's a valuation reality check. Elon Musk said initial production for Tesla's Cybercab robotaxi and its humanoid robot Optimus will be agonizingly slow before accelerating later. Context: a lot of Tesla's market value is tied to the autonomy and robotics upside, not just car sales. The market wants timelines, ramps, and credible scale. Details. The quote emphasizes an S-curve ramp and that early production is always slow, especially when there are many new parts and process steps. Impact. Near term, this can cool expectations for rapid revenue contribution from Cybercab and Optimus, which may weigh on sentiment if investors were modeling aggressive 2026 or 2027 numbers. Longer term, it's arguably positive that Tesla is managing expectations and acknowledging manufacturing reality. Takeaway. Treat Cybercab and Optimus as options with real potential, but don't price them like mature businesses until there's evidence of repeatable manufacturing scale. Story 6. AI hardware headlines are getting messy. AI 5 is almost done, and Dojo 3 is back with a new purpose. In separate reporting, Musk says Tesla is almost done with the AI 5 chip design, after earlier implying it was ready months ago. And Tesla is also discussing a restarted Dojo 3 effort aimed at space-based AI compute. Context. Tesla's autonomy roadmap depends on compute, both in-car inference and massive training capacity. Hardware delays can slow feature rollouts and can also raise costs if Tesla needs interim solutions. Details. The key point is uncertainty. Almost done is not the same as in production, validated, and shipping at scale. Meanwhile, Dojo 3's pivot towards space-based compute is intriguing, but speculative in terms of near-term automotive payoff. Impact. Investors may see this as execution risk in the autonomy stack. If the market senses slipping timelines, it can compress the autonomy premium embedded in Tesla. Conversely, if Tesla delivers a genuinely better cost per training dollar platform, it can become a long-term advantage. Takeaway. Watch for concrete milestones, tape-out, validation, supplier ramp, and deployment, more than ambitious claims. One quick market note before we wrap. Tesla shares were down about 4.18% in the broader tech-led sell-off referenced in market coverage, with options flow described as moderately bearish on a down day. In risk-off tape, high-multiple names like Tesla tend to move more. Now let's close it out. That's Tesla Daily News Podcast for January 22nd, 2026. The big themes today were Model Y still winning in China at scale, Europe showing signs of demand and pricing pressure, and autonomy-adjacent products like Cybercab and Optimus facing a slower real-world ramp than the hype cycle implies. For tomorrow, watch for any additional pricing or incentive moves in Europe and China, plus any concrete milestones on AI hardware timelines, because that's where the valuation debate is happening. If you found this useful, subscribe to Tesla Daily News Podcast and follow us for a sharp, daily investor-focused read on what's moving Tesla.